Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis update of commodities. We're going to go over the dollar, 10, 30-year yield, precious metals, and all the other commodities that I follow. If you guys need any help navigating this commodity bull market, definitely sign up for the finding-value.com Platinum membership. Join our community. It's kind of a fun community as we chat with a lot of people sometimes. Question and answer session for the Platinum members Sunday at 5 p.m. coming up this next Sunday. So let's dive in here and look and see what we've got. We've got the DXY, which is the dollar, the relative strength indicator of the dollar. It's higher today, up 0.6%. We've broken out of this upward channel / slight megaphone pattern to the downside. So I do think that we will grind lower, but in the short term, there is the possibility that we come back up to do a retest of this before heading lower. So there is that possibility. What I consider this is just noise. Noise where I think that the dollar will go down and eventually. Just like it did in the mid-2000s, we went lower during that bull market. I think that there's something similar that could happen in this from a long-term perspective, where we come back down towards maybe that long-term bottom channel line. And what this is basically telling us with the DXY is imbalances in the system. If other currencies are weaker, if they've printed more money or their monetary conditions are not as tight as ours, you see a strengthening dollar. And then you see it all reverse when those conditions change and inflation comes to America and their inflation subsides or goes down. So it's all just one big relative strength indicator for the DXY. And in all honesty, guys, these are all garbage currencies that are falling out of the sky, so to speak. Everyone is falling. We're just measuring the relative speeds against each other. So don't by any means think that this was a strong dollar. This was not a strong dollar. That was a whole bunch of inflation in the system, and this is just a relative strength against those currencies. And investors look for that relative strength, and they say, well, I'd rather be exposed to the dollar, which is stronger versus other currencies. So there is a preference for some people to invest in real estate where the currencies are stronger versus other areas where the currencies are losing value, even though the real estate could be going up in that other currency. So it's all about a foreign exchange difference that they're exploiting, some investors. The 10-year yield, slightly higher today. Again, this could go down in the short term. I think that big, long-term, big picture view, right? Big picture view, I think yields are going to go higher over time. And why is that? Because I think we're going to go into an inflationary 10 years, 30 years, or maybe even from here on out. I don't necessarily know that, but I think that this paradigm has shifted, and we've got a new shift to increasing interest rates after breaking this big long-term downtrend. The inflation is going to come from the millennials, going into home buying years, and the baby boomers going into retirement years, where they're going to get paid out on their obligations of Social Security, Medicare, Medicaid, all that stuff. So I think that's going to be inflationary drivers. And we could also kick this off with an increase in interest rates, which then puts us into a debt spiral where the interest payments on the debt also need money that's created from nothing to be covered. Bond prices are the inverse of yield, so they are tanking. But we're seeing in the short term that the markets think that this inflation from a percentage point has peaked. So if it went to 8 or 9%, that it peaked and it's coming down to 7, 6, 5, 4, and so on. So that's what this is pricing in. That's what we're seeing is that reaction to it. But Powell said he's going to continue raising interest rates. He may see something different than we do. And that is where the market could be getting off sides here. We could very well have interest rates continue higher and bond prices go lower if Powell comes out and says, look, I'm gonna pound this thing down to the sand and I'm just gonna keep raising rates, which is possible. I mean, that's what he says he's going to do. TYX, which is the 30-year yield, a little bit, well, it's sideways, but stronger in momentum today. That's what the green candlestick is, but it was down 0.03%. But again, the market is expecting a peak in inflation and a potential lowering of it, which makes complete sense. From their perspective. TYX, TNX is basically flat, and gold prices would be usually flat, but we've got a stronger dollar, so it's probably slightly lower given those market conditions, which is basically flat yields and stronger dollar. The CRB index, it's still broken out above this falling wedge to the upside. There's your breakout, and this is the retest. So this still, to me, signals that it's a positive, that we could go higher in the CRB index. The CRB to S&P 500, this one is breaking to the downside, but it could be a false breakdown, so we need to see a couple of closings in this area before I make that claim. Looking at gold, slightly lower today, but it still looks fantastic from a longer-term perspective. Big buying pressure, small selling pressure, and it looks like it's consolidating here in some sort of whatever pattern it's going to create. The downtrend's been broken. This is the downtrend that's been broken. The bigger downtrend here also has been broken to the upside here, and we're doing that retest, I think, on the big blue one. There's that big blue one there. We could come back and retest, and then I want to see a big move higher. So it's broken out of both of these downtrend lines, the short-term one and this one, to the upside, and now we got to get working to the upside. Silver's right at resistance. We're going to try to break through that. And you can see we're sold off 2.16%. So we've come on down there, and we're back within this pattern. Does that mean that we're not going to go higher? Means that we may consolidate for a little bit longer. Platinum's still looking pretty good. I know it's throwing a little bit of a wick at the top of today, which means we had a little bit of selling pressure towards the end of the day. But it looks like we've still got some buyers here. It's not, they're not selling it all out. And this guy, it depends where you want to put this guy. It's either here, yep, on that, or you can go logarithmic, which it changes it to be up here. But either way, platinum still looks fine. You just got to be patient. Investing is a patience game. And I know, some people, they're like, well, no, that's what people say that are long-term investors or ones that can't trade or whatever. Well, I mean, I invest. I don't really trade these things. So XAU to gold ratio, it is down. The gold and silver miners underperforming gold itself. And let's get off logarithmic here. And there we are right there. We haven't really gone below this support level. So it's just a down day. GDX down 4%, getting sold off a little bit harder than some of the other sectors. Hopefully it comes up here. There's GDX coming on down. We haven't really broken any support levels or anything. We're just kind of moving around freely. SILJ doing the same thing, coming back to support potentially, down at about $10. Crude oil trying to sell off below this strong support level. It is a support level. We got bought back up throughout the day, actually ended the day up 0.5%. Now, the strength here, we've got strength here basically supporting us, and we have to see if this is going to hold. But my opinion on crude oil is there's if you look at things from a long-term perspective, I think that oil is going to, well, my opinion is it's going to go higher. Why? Well, we've had China on lockdown, and that lockdown is going to end at some point. And what did we do in America? Everybody was buying stuff. They were traveling after that lockdown. And I think the same thing's going to happen in China. And I think they're actually using the lockdowns to suppress demand for certain commodities. That's kind of my opinion. So I'd rather not be left out on that. I'd rather be in it. because I think, in my opinion, that it's going to go higher. Now, I know a lot of people are worried about recessions. I know that they're worried about the markets pulling back. And I am going to ride through that. I already made that determination. It's my strategy. And I'm going to buy on pullbacks. So right now, we're right on that support level, and that's where we're at. Natural gas heading higher, up 4.4%. This also is difficult to play because a lot of the companies are 50%-ish natural gas, 50% oil. And we've got natural gas prices going up 4.5% today, and crude oil going up a little bit. And I know that we have a lot of the companies that were down today because they were basically scared out at the beginning of the day with that gap down. So I view this all as opportunities. This is XOP. Yeah, you know me, down a little bit, 3.7%. We're still above support. Everything still looks good. And we could converge where crude oil strengthens or goes sideways while XOP even can weaken a little bit. And you're going to have these expansion contractions between these two, crude oil and the companies themselves, going up and down against each other. Same with energy service companies. Energy service companies have broken the big long-term downtrend, and they could very well pull all the way back to do a retest before heading higher. The path, what I think what most newer investors, what they get wrong, at least this is my opinion though, they fail to see the big picture, and they're persuaded by the short-term price movements. That's where they get messed up. So they're looking at this saying, oh no, it's going to go down. It's a bad investment. Oh no, it's a good investment. Oh no, it's a bad investment. If you're doing that, you got to catch yourself and say, look, why am I in this to begin with? The bigger players, the ones that make lots of money, the Warren Buffett types, the Peter Lynch's, all those types of investors, they don't do that. They take a mindset, they get in it, and they ride it for the 5-10 year hold. They see the bigger picture. They see the vision. And hopefully that's similar to what I'm providing here to some extent, is the big picture vision. Looking at Sprott Physical Uranium Trust, selling off today, down 1%. We failed to break out of that big long-term resistance support level. It's resistance level at 1815, and we could head lower. It looks like to me like we want to head lower in the Sprott Physical Uranium Trust. We continue to sell off, and we're breaking another support level right where we're at. We'll see if it holds. It's not broken yet. I won't go there because you obviously have a big update tomorrow or later this week. But it looks like it's struggling here. We've broken this trend line. We failed to break this resistance line above it. Now we might fail to hold this support level in the blue line there. URNM also selling off today. Go off logarithmic here. Let me see if I drew how well I drew this in, because it looks like I cut a lot of stuff off here, because it'd be somewhere in this range in here. But we're right at that support level. Again, lots of weakness. I'm seeing lots of large selling pressure days sprinkled throughout here. One here, 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 here. They're all over the place. I usually don't like seeing that, especially on the right-hand side. It makes me think that people want to sell this and push it lower. So that is a possibility here where uranium, URNM, could break out of here and head lower if the sellers want to push it. And it looks like they're trying to do that. Looks like there's a lot of selling pressure over here. Looking at TAN still, let's go big picture view on this. Still looks all right. I don't see anything too crazy here. For TAN, we were down today 2.5%. Just moving sideways. Copper miners ETF, again, we're down 2.5% for copper. If we take a bigger picture view on it, we're right at support here. We're above it. Everything still looks all right from that perspective there. We're just bouncing around. Lithium, LIT, that ETF, that pulls up here. We're selling off again, and the overall markets are looking pretty weak. Lithium could dive bomb out here to the downside potentially if the overall markets eat it, because it seems like this is following the overall markets to some degree for LIT. There we are, and I'm seeing a lot of selling pressure through here. The buyers aren't coming in and pushing this higher. I would be surprised if this ends up. I think we're going to probably head lower for LIT. REMX heading a little bit lower. We're right on support. And it still looks okay. We broke this pattern to the upside, and we're just chopping sideways. The S&P 500, we have not broken this trend line here. And I do think that potentially we could break lower here. And what I'm seeing is you kind of tie those together there, and then you tie this together here. We have a rising wedge that's squeezing up. If we kick out to the downside here, I think we could see further downside in S&P 500. Looking at the overall, this is the U.S. Composite Index here. And again, I'm just looking to see if there's any sort of pattern that we're creating. And I mean, that's kind of far-fetched there. But we're still haven't broken out of this pattern yet. Got a little bit of selling pressure today. I would be still looking for the downside in this if the dollar goes higher and rates go higher. So that's something to watch. If the rates go lower, I think it still has a chance to break to the upside. EEM, stronger dollar, lower emerging markets, down 0.45%. It does look like we're putting in some sort of consolidation pattern or something like that where we could break to the upside. That has broken the big long-term downtrend. That looks good from that perspective. XHB also putting in that what looks to be almost a double bottom. And with lower rates, this is going to help the home builders. So I do think that this will continue higher. It still looks good for that to potentially happen. Again, we're playing with probabilities and statistics, not for sure outcomes. Looking at Moo heading a little bit lower. What I'm seeing there, we're still above this support level. It still looks all right. We're just bouncing around. Copper, HG1, this is copper futures, down about 1%. But again, we're right on that trend line. We're right on the trend line. We're still above this support area there, just bouncing sideways. We've got lumber. Lumber down 0.33%, just moving sideways for lumber. Looking at the big picture view, though, I mean, we're still at an elevated area. We've got strong support down at $365. And we're at 420 right now. Iron ore. So iron ore, this has been a tough one to read here, but it's up about 1% in a falling wedge. I do think that'll break to the upside. Give it time. Aluminum, also ugly looking chart here just from the way it looks, but we're bouncing sideways, down 1%. Still looks fine to head higher. We're at support. Baltic Dry Index, much higher today, 6.6%. And the Baltic Dry Index is putting in what looks to be, could be, a ferocious upside move after we break out of this declining falling wedge. This does look like it's trying to complete the third, the 1, 2, 3 humps, and then the break. These are 1 and 2 ahead of it. So that looks good for a move higher eventually. Coal, still looking good. I think this is going to rip it higher. I know I was saying that in the face of some big, strong pullback, but that's what historically has shown for a potential, we'll call it herd mentality move. So up 3.9%. I think oil is going to go up with it. That's what I think. I'm still an ultra oil bull. I don't think that the fundamentals justify a move lower. I think it's all headlines and news that are trying to drive it lower. And if we get China to open back up here, I think it's going to get pretty tight at some point. Now, that doesn't mean just because I'm a bull that it's going to go up in the next half month. What that means is that I'm taking a position based off of multi-years where I think it's going to go much higher. And I'm not going to sell anything. Now, here's Ethereum. Ethereum just moving sideways. To me, this looks like it's trying to put in a bottom. If we see strength, I think we're going higher. And if we see weakness, I think we're going lower. It's basically at a point where we are consolidating and the buyers and sellers are fighting each other. and it's consolidating sideways. Now, we did enter this from the top side down, and if we don't break out of this to the upside, we could see a move lower out of this. Again, I don't have any skin in the game here, but BTC is doing the same thing. It's consolidating sideways. So that's where I've got that going on. But that's what I've got for today, guys. Quite impressive how oil reversed that move. It's right at support. I know it gapped down on news of rioting out in China or something like that. But again, guys, the long term, news doesn't drive this long term. It's just news. And it can move prices in the short term. It can be all volatile, but the fundamental structure of oil is in deficit. It's that simple. Looking at some of these other ones, I don't know what the inventory levels of uranium are necessarily. It's hard to say if they're in they're in a deficit. I believe the numbers, but it's hard to say how much inventory is left. We know copper's really low. We know zinc's really low. We know aluminum's really low. We know all these materials are very low in inventory. At some point, there's going to be a day of reckoning. That's the way I look at it. Now, is that now? Is it in 6 months? Is it in a year? Don't know. I know a lot of people are going to try to sell you and say, look at all these charts. This is what it's going to do. But the fundamentals is what drives everything. In the short term, prices can go either way. It can be driven by news. It can be driven by fear of a recession. At least they've been using that one a lot. It can be used by lockdowns or riots or reopening or whatever. But the demand over longer period of time, unless they permanently lock down people, is going to come back. And that's going to mean higher demand for oil and a lot of these other commodities. And given the market conditions of inflation and the potential, we'll call it the millennials coming in home buying years, the baby boomers going into retirement, collecting on Social Security and all these other things, it all adds up. It all adds up. So if you guys like the content, give me a thumbs up. Subscribe to the channel if you haven't already. Subscribe to the website if you'd like. We still have the discount going on. Coupon code discount if you'd like to join. And we have a 5 p.m. Sunday Mountain Standard Time question and answer session for the Platinum members. All right, guys, we'll catch you next time. This is Finding Value.